DBIT5 dah sampai, over. Roger.
Bos, tepi sikit.
Memperkenalkan YBFF Yara by Farm Fresh. Susu sedap, lagi berkhasiat. Susu untuk rakyat Malaysia.
Assalamualaikum and good day. My name is Putri Naimi Shizul binti Sofan Sofian. My ID number is SIT24070293. In this presentation, we will analyze the financial performance of two publicly listed dairy company in Malaysia, which are the Dutch Ready Milk Industry Berhad and Farm Fresh Berhad. Our analysis is based on the audited financial statement for the year 2023 and 2024. The purpose of this presentation is to evaluate the company liquidity, efficiency, debt management, and the profitability, followed by a competitive comparison for the year 2024. Dutch Ready Milk Industry Berhad is one of the longest established dairy company in Malaysia. The company was incorporated in 1963 and has been listed on Bursa Malaysia since 1968. It operates a subsidiary of Royal Friesland Campina, a global dairy cooperative based in the Netherlands. Dutch Ready produces a wide range of dairy products, including fresh milk, UHT milk, flavored milk, yogurt, and nutritional dairy products for different age. In recent years, Dutch Ready has focused on maintaining operational stability in a competitive and cost-sensitive market. The company has focused challenges such as raising raw material price, high energy costs, and inflationary pressure on consumers. As a result, Dutch Ready adopt a conservative financial strategy, prioritizing cost control, stable profitability, and strong solvency rather than aggressive expansion. Next, my teammate will explain the background of Farm Fresh Berhad and continue with a liquidity and efficiency analysis.
Assalamualaikum warahmatullahi wabarakatuh and good day everyone. My name is Muhammad Irfan bin Faisal Azhar and my ID number is SIT24070191. I would like to continue this presentation by explaining the background of Farm Fresh, liquidity and efficiency analysis. I would like to start with the first one, is company background. Farm Fresh Berhad is a Malaysian dairy company that began operating in 2009 with a small dairy farming business. Over time, the company expanded rapidly and developed a vertically integrated business model that includes dairy farming, meat processing, and national distribution. Farm Fresh is known for its fresh milk, favorite dairy product, yogurt, and plant-based alternative. The company placed strong emphasis on product innovation and market expansion. In recent years, Farm Fresh has pursued an aggressive growth strategy through capacity expansion and investment in new facilities. While this strategy supports revenue growth, it also increases capital requirement and financial risk. Next is liquidity analysis. Based on the liquidity ratio, Farm Fresh demonstrates a stronger short-term financial position compared to Dutch Ready. Its current and quick ratio remain well above 1, indicating that the company can meet short-term obligations using liquid assets. This strong liquidity position reduces short-term financial risk and provides flexibility to support daily operation and expansion activities. In contrast, Dutch Ready record current and quick ratio below 1, indicating weaker liquidity. This suggests that Dutch Ready depend more on inventory turnover and efficient operation to meet short-term liquidity, which increase liquidity risk during period of slow sales. And the last one is efficiency analysis. In terms of efficiency, Farm Fresh shows strong improvement in inventory turnover, indicating faster inventory movement and better stock management. This is particularly important in the dairy industry, where products have limited shelf life. However, Farm Fresh also record a long collection period, which means it takes a long time to collect payment from customers. This may place pressure on cash flow despite strong liquidity ratio. Dash Ready, on the other hand, shows slower inventory turnover but a shorter collection period, suggesting more effective receivable management. Next, my teammate will discuss asset utilization, debt management and profitability.
Assalamualaikum warahmatullahi wabarakatuh and good day everyone. My name is Nur Aina Sahira bint Rusdi and my ID number is S124070109. Today I would like to discuss and explain about the asset utilization, debt management and profitability. Firstly, we go to the asset utilization. Dash Ready record a higher total asset turnover compared to Farm Fresh to indicate more efficient use of asset to generate sales. This reflects the company matures operations and establish production facilities. Farm Fresh record a lower asset turnover, although it shows improvement compared to previous year. This indicates that the company is still in the process of optimizing asset usage following expansion. The second one is debt management. In terms of debt management, Dash Ready maintains a conservative financial position. The company has a lower debt ratio and a very strong interest coverage, indicating low financial risk and a strong ability to meet interest obligations. Farm Fresh shows increasing reliance on debt management to support growth and expansion. While this strategy can enhance profitability, it also can increase exposure to financial risk and increase rate changes. The last one is profitability analysis. Farm Fresh demonstrates stronger profitability performance, recording a higher net profit margin, return on asset, and return on equity. This indicates effective profit generations from sales, asset, and shareholder funds. Dash Ready also record improved profitability. However, the improvement more moderate. This reflects a stable but cautious approach to profit growth. Finally, my teammate will evaluate overall performance, present the competitive analysis, and conclude the presentation. Thank you.
Assalamualaikum warahmatullahi wabarakatuh and hi, my name is Muhammad Faiz Danish bin Abu Bakar. My student ID is SIT24070104. This final section, I will evaluate overall performance, present the competitive analysis and conclude the presentation. Overall, the financial performance of both companies shows clear differences in strategy and risk profile. Farm Fresh demonstrates stronger growth performance supported by high liquidity and improving efficiency ratios. These results indicates that the company is well positioned to support expansion and respond to market demand in the short to medium term. However, this growth is supported by increasing debt levels, which raises financial risk. Dash Ready, on the other hand, show a more conservative performance. Although the company faces challenges in liquidity and assets utilization, its strong profitability improvement and especially high interest coverage indicate strong financial stability. This suggests that Dash Ready prioritize risk control and long-term sustainability over aggressive growth. From a competitive perspective, Farm Fresh appear more competitive in the market in 2024 due to its stronger profitability and liquidity position. These strengths allow company to invest in marketing, product innovation, and capacity expansion, which support market growth. However, Farm Fresh increasing reliance on debt means that its performance is more sensitive to changes in interest rate and operating conditions. If profitability weakens, the company may face clear financial pressure. Dash Ready, in contrast, maintains a strong and stable market position, supported by lower financial risk and strong solvency. While its growth is slower, this stability allows the company to remain competitive during economic uncertainty. Looking forward, Farm Fresh future performance will depend on its ability to manage debt effectively while maintaining profitability. If the company can control costs and improve receivable collections, its strong growth position can be sustained. Dash Ready's future performance will depend on improvements in liquidity and asset utilization. Strengthening working capital management could enhance competitiveness without increasing financial risk. In conclusion, Farm Fresh demonstrates stronger short-term competitiveness driven by growth and profitability but with high financial risk. Dutch Lady demonstrate long-term financial stability supported by strong solvency, although improvements in liquidity are required. Overall, both companies reflect different financial strategies, and each remains competitive within its own risk and performance profile.